You're watching The Breakfast Club.
Morning, everybody. It's DJ Envy, Angela Yee, Charlamagne the God. We are The Breakfast Club. We got a special guest in the building this morning, Stacey Tisdale. Good morning.
Good morning, Stacey.
Good morning, everybody.
How are you doing?
Always a pleasure to be here.
Let's talk money.
No, she came bearing gifts first of all, because she
I
walked
did
in the
come
room.
bearing gifts.
And
We can talk about money.
Okay.
Well, let's talk about these gifts. These are friendly flip-flops.
Those are friendly flip-flops as part of a campaign that I'm working with called Walking Forward Together in St. Martin. And I don't know if you know anything about St. Martin. It's half Dutch and half French. Instead of fighting about it, they split it. So the idea of the campaign is to put out a message of unity at a time when the world truly needs it. And those flip-flops go to local retailers who sell them, so that puts money in their pocket, and they give a percentage of the profits to needy kids.
I've never hung out in St. Martin, never. Always just land there and then go to Anguilla.
You know what? When I first graduated from college, that's where me and my friends took a trip, and we all went to St. Martin, and that's where we spent that was our celebratory graduating from college trip.
Wow, y'all had money.
Well, actually, one of my friends' grandparents had a share.
Oh.
So we were able to stay there.
Timeshare.
Yeah, they had a timeshare, so we were able to stay. That's why we went there. But it was really fun. We had a good time.
If you like New York City, you'll like St. Martin. It's like a big melting pot kind of place. But everybody Walking Forward Together on Facebook. It's a great campaign, and it benefits the children in need on the island.
That's
Nice.
great. I'll be going there on May 5th. I already have it on my calendar. So bring these special
I'll hook you
flip-flops.
up.
I'm there.
Stacey, you're a financial journalist. We've been having a lot of discussions about banking black. What are the benefits of banking black?
Well, the black community, particularly now, is going to really have a wake-up call about empowering itself
Yes.
instead of looking around. And we're going to talk about that. We're going to talk about the history and how we get there. But to answer your question specifically, there isn't a big initiative that Killer Mike actually called people to action on
Yes,
in
he did.
July called Bank Black. And it's great. It encourages people to put their money in black banks. There are 21 in the United States that are left. And it's a great thing, but as we were just touching on empowering ourselves, it's great to get depositors into these banks, but what we really need to do is pool our money and own some bigger financial institutions because just those deposits alone are not going to move the needle.
So how do we do that? How do we pool our money to own the bigger financial institutions?
Well, the first thing the black community has to do is start to see itself as a economic force to be reckoned with. I noticed, we're not getting into politics yet, but even in the political campaign on both sides of the aisle, you're hearing so much discussion about, blacks in lack and blacks at the bottom of the gap. But the reality is that the black community has over $1 trillion in buying power, putting us on par with, if we were the nation, we'd be the 15th richest nation in the world. And even, to me, more interesting than that, I know we're going to talk about the financial history of blacks for Black History Month, but that black households earning $200,000 or more are the fastest growing income group in the United States.
And everyone tries to market to us. I feel like everybody's trying to scope their advertising campaigns to the black community because they want our money.
They do want our money. And not just from a consumer standpoint, what you're talking about is the consumer, but what I'm talking about is if you look at all the wealth that this community has, when you're looking at political tables, we should be at the table talking about, okay, what do we do to get money into the black community? Not some of these conversations, we're going to focus on the inner cities, There's a lot more to us than that. And if we pool our resources together and if the government takes a serious look at us as an economic force, we can help our inner cities and everyone else.
A lot of people don't believe that number because they like to say black people ain't got no money like that.
It's not. It's just simply not true.
Yeah, I know.
It's not. And it's really beautiful. I have a financial education nonprofit called Winning Plays, and one of the groups I work with is called Figure Skating in Harlem, which is an after-school program, STEM program in Harlem. And I went and I gave a discussion to the girls recently on the financial history of blacks, and these girls range from elementary to high school. And I said to them, okay, if I said to you, how are blacks with money? What do you think about when you think about black people with money? The things that were coming out, they don't know how to manage it. They don't know how to invest it. They got a lot of debt. We don't know what we're doing. them also not realizing that they're talking about themselves
Right.
and how they feel about themselves. And I was like, what if I told you that Black households earning $200,000 or more are the fastest growing income group in the United States? What if I told you that Black female entrepreneurs are the biggest group of, or the fastest growing group of entrepreneurs in the United States? They were so taken aback. And when we got into the history of Blacks and what Blacks have gone through historically, those numbers to me show our community as one of the, it's the greatest one of the greatest stories of resilience in U.S. history. And we have to, like when you're saying Blacks ain't got no money, that's how we think of ourselves. That's not true. Look at the fabric from which we're cut. And when we get into talking about a little bit about our history, what we've been through and what we've overcome, the whole point of my work right now, what we all should be doing is changing the conversation, changing the mentality. Those attitudes have to change before we're taken seriously.
I mean, it is a lot of us that are poor and disenfranchised, but when we do get some money, we spend it.
Yeah, I mean, we don't have a lot of. Well, first of all, everybody spends, and that's the reasons why we spend money are what we should look at. I mean, from the days that we're born, we get these messages that you're supposed to live a certain way. You're supposed to give your kids certain things if you're a good parent. The way we saw money managed when we were growing up, that's one of the biggest influences on our financial behavior. I did a 6-year research project into what drives financial behavior because what I was seeing just didn't make sense. I've been a financial journalist for 20 years. I've just had the blessing of working at all the biggest news organizations in the world. And you could see that when you give people information, it doesn't necessarily translate into behavior. So I had to know why, and that's where I started all this work and research. And the real causes of our financial behavior have got nothing to do with money. And it's much more, it's conditioning, how we were raised, how we saw money raised when we were growing up. And our community, what do we see people like us doing? Our gender, we're conditioned from the beginning of time that men provide and protect, women nurture. And all of those things play out in what we believe is possible for ourselves. And that's what you're seeing when you see overspending. Right. If you don't see a bigger picture for yourself, if you don't see yourself getting out of this situation, it is about living in the moment. It is about living for today. So it's got to be a deeper dive than just, we're just looking at it from a numerical, this person overspends, this group does that. There's a lot more going on to it. And let's, get into the history of it so people can see what's up.
It's also what you learn at home, because I remember when my ex-boyfriend, he was always really, really great with money, but that's because his dad was a banker. So he understood a lot more about investing, and like his parents would do things when he graduated from school. They'll be like, okay, we're going to get you, instead of just renting, we're going to give you the money to put down so you can buy something and own it and then pay the mortgage, and that'll be like renting. But that wasn't something that I learned or that anybody in my family was trying to do. But I think a lot of it is also what's passed down to you from your parents and how they spend money in the house.
Right.
And
that's where we run into some challenges, because a lot of, we're talking about this wealth that's being built in the Black community, but a lot of it's first generation wealth. We don't have the history of, our sitting at the table with our parents and grandparents a lot of time talking about the stock market. A lot of this is new money. And you see it in how behavior plays out. Like wealthy Blacks, as Blacks who have a net worth of $739,000 or more, if you look at how they invest, they're very cautious investors. If you look at when there's a stock market sell-off, where research shows Blacks are the first sellers, because they carry a lot of that. They're carrying, it's first generation wealth. They have a lot of responsibility. Blacks are more. A study by Prudential found that Blacks are more likely than any other group to be financially responsible for friends and family members.
I think money means more to African American community, because I think a lot of times
we used to not having nothing.
Yeah, we're used to not having it, and it like I didn't get a loan of $1 million and say investors. Everything I had, I worked for. So when you see the stock market, and especially for people who don't understand the stock market, you see it going down, you automatically want to say, okay, well, let me get my money out and have my money.
Yeah.
Same thing with the banks. For a long time, my grandmother never put money in the bank. She had a bunch of money under her mattress because she was always fearful that she wouldn't be able to get it if something happened, or if she needed it, she needed to get her money. And, with me, I'm the same way. I rarely put money in the bank. Like I have small money. I'd rather put it in something else.
You got it at?
Right here.
There's a lot of different things.
Wait, where is it?
No,
Exactly.
because
That mattress in the back, maybe?
Nah, because I'd rather own things that I know that's going to make money, because a bank is only going to get me, what, 0.0005%? So if I buy things, and this is what I think our community needs to know more about, because a lot of people say, you need to invest, you need to put money there, but they don't know how.
Exactly.
It's trying to tell somebody who works a 9 to 5, whether they work for mass transit or a post office or they're a business person, they don't know where to invest their money, nor do they have the time to research. So it's almost like we need a handheld way to say, okay, this is what I need to invest. You know, like for me, I always did well with precious metals. I like gold. I like
sophisticated,
diamonds. So
yeah.
I said, that's where I'm going to invest my money. It always seems to do well. People always buy diamonds. They always buy gold. It's a sign of luxury. So I put my money into precious metals. So I don't put money in the bank. Stocks, I'm kind of scared of.
I mean like precious metal stock companies.
Precious metal stocks, and actually
He be
buying
buying
the
chains is what
actual
he's
gold
saying.
and stones.
Yeah.
And stocks scare me because I've seen so many people take a beating.
Right.
You know, when that
Yeah,
stock
but the
market
stock-
dropped,
yeah.
what was it, 10 years ago?
Yeah.
I seen, my mother-in-law lose everything, everything. And she didn't have enough money to say, okay, well, I'm going to keep it there and bounce back. It was gone. It was no more to it. It was wrap over, see you later, sayonara. You know what I mean? So that scares me. So there's certain
Sayonara.
stocks that I look at, but for somebody who's looking to invest money, let's say they have $10,000, where would you tell them to put that money?
Okay, let's get some rules together. So the U.S. stock market is probably one of the best investments in history. It averages 9% annually over time if you go back historically. There's ways we invest in the stock market. So I want everybody to remember for a minute the 60-30-10 rule. You should have, this is just a blanket rule, and you adjust it according to your risk level. But 60% of your assets should be in things that will grow fast, things that can grow big like stocks. 30% of your assets should be in safer investments like bonds. 10% of your assets, any money, easier rule, any money you're going to need in 5 years or less, you don't want it in the stock market.
You could put that in the bank.
You can put that in CDs. There's, other low risk, non-risky investments that money should be. If I'm retiring in a few years, you start taking money out. If my kid's actually going to college, this nest egg I have saved for my kid, he's going to college in 3 years, you start taking some of the money out of stocks and putting it into cash. Other than that, leave it alone. Because people, have to remember with the stock market, you haven't lost any money until you sell.
Now, to tell the people that's listening, if you don't understand, what she's saying is if you put your money in the bank, you'll get probably, 0.5% back on it, and the stock market makes an average of 9% on your investment.
Right.
I'm just saying, go ahead.
But it is still a risk.
That's why you want the money that you put in it. You want to have time to ride the market out. That's why I'm saying it's that 5-year window. If you need money in 5 years or less, it shouldn't be in stocks. But if you look at everything you have, and okay, this is money that I have saved for when I get older, or in 10 years, in 15 years, that money should definitely be in stocks.
But one quick question. So the thing about stocks, though, because I think sometimes people think I'm going to put my money, invest some stocks, and get all this money back because they've seen it happen a few times, like big stories. Oh, I invested in this, and then the stock blew up, and I made all this money. But that's a rare thing.
They're you have to think of them.
Usually it's long term.
It's a long-term investment. There's easier ways to do this now. We're talking about like stock picking, which I wouldn't recommend for anybody because of exactly what you said. One, you have to have the time and everything you need to research it. There's exchange-traded funds, which is a term I want everybody to get familiar with, ETFs. And what that is, it's like a basket of stocks. So you own a little piece of a lot of different stocks that's put together like one stock. For example, the general investment advice, an ETF linked to the S&P 500 index. The S&P 500 is the stock measurement. The easiest way to do this, I love doing this story, 3 ways to invest $100. Go to TD Ameritrade website. You can open an account for $50. I think the minimum is either $50 or $100, correct me. And they will, one of the investment options, I think the symbol is SPX, is an S&P 500 exchange traded fund. So unlike a mutual fund where you have to pay big fees and stuff, this is just money that can, you can keep building and putting it in. Whenever you buy any kind of fund or anything, we're going to drip it. We'll talk about that in a second. Let's stay with ETFs. So you can go to TD Ameritrade. You can open an account for $50. You can buy an S&P 500 exchange traded fund. All this stuff takes like a minute. But as we discussed last time I was here, something everybody should be doing right now is putting the Acorns app.
Right.
You were going to ask your kids to do it, I remember.
Yeah, they did it.
They did it?
They do it.
But the Acorns app on your phone. And that's essentially how Acorns work is it has a feature called a roundup feature. You attach it to your debit card. Every time you spend, say, $4.55, it's going to round up and it's going to invest the other money into the stock market. You're not even going to notice it. It's going to be like investing spare change. That's Acorns. Pick the roundup option. Pick the S&P 500 option. It's that simple.
It takes like the 45 cents as far as
Yeah.
roundup. Okay.
Yeah.
And then also suppose you're sitting.
Very simple. I got Acorn.
Yeah.
I use Acorn apps as well.
Yeah. And then my son's is like $2,000 now. You're not paying attention to the money and it's growing. What's really cool, especially if you're trying to get your kids into it, is you can watch it real time and it'll tell you if you keep this up in 10 years, you'll have this. It's just amazing. You can find out you got an extra $5. You push the button, you put it in there. Since I was on this show last time and since we discussed Acorns, something amazing has happened and the founders of Acorns want to say thank you. A whole group of investors who didn't think they were wealthy enough to participate in the stock market is now doing Acorns and they're participating in the stock market.
That's great.
And what is it's different, like you're saying. They did. These are people who didn't think they had enough money to invest in the stock market, so they're taking a certain pride in it, and have now been asking questions about the companies. For example, the owner was telling me they started a newsletter. What do I own? Who's the company? People are taking pride in the ownership, the actual stock. But it's but I did a feature story on it. Harry Owens is the new face of investing, and it was this 28-year-old black man who had 3 kids. And he heard about Acorns on this show. Harry Owens wrote to me, I heard about you on Breakfast Club. I did it.
That's why we can't let people promote stuff without having a piece of it. Because they about to sell Acorns for so much money and get paid.
Whatever, be quiet. No, that's awesome. Harry Owens.
So Harry Owens is, and I did the feature. I'll send you the story. Harry Owens is a new face of investing. And I talked to him and he's like, man, my kids are going to have money and I got this and I own this and
What
I
a
see
great
in 10 years
feeling.
it'll be this. And that was because we had a conversation like this on this show. And it's not, the number stuff is the easiest part of investing. It's the understanding the why and all that kind of stuff. And I think something that's very important to talk about today is Black History Month. And I think for Black people to really step into their financial power, they have to understand our financial history.
Right.
And it really started with Abraham Lincoln. And when Lincoln freed the slaves, he was the first person who actually had the vision of how big the Black economy could be. Is when he freed the slaves, he's like, let me think. So these people have been enslaved. I'm giving them a tiny bit of money to get started, and they've never worked with money before. And they don't understand it. So I've got to give them a place where they can put this money. So he gave them the Freedmen's Bank, and it was a bank where all the freed slaves and all the Black veterans started depositing and building money. When I hear people say things today like, oh, we're too disadvantaged to have money or we're whatever, within 10 years, I think by 1864 with 1870 something, within 10 years, this group of freed slaves amassed $57 million in those days. This is 10 years after slavery. They built
pooling their resources.
They built schools. They built community centers. This is 10 years after slavery. So, anything that's as hard as it gets. So there was a huge economic downturn, the biggest one actually then due to the railroads crashing. So that was like a depression. So that took a hit on it. And as these slaves were building money, all the officers and all this, just a ton of corruption came into it. And then Frederick Douglass was actually asked he had $12,000 in the Freedmen's Bank. and he was asked to save it. And he came in and he took a look. He's like, too much, the deposits of it, it's gone. So he went to Congress and he asked them to do what the FDIC does now. And he said, can you please insure these deposits for 65%? Congress said yes, but instead they took the money and they used it to build the Treasury Annex building in Washington.
Wow.
Which is why Treasury Secretary Lew renamed it, he's not Treasury Secretary anymore, but he renamed it the Freedmen's Bank, giving it back. But can you imagine what that $57 million, how many trillions of dollars that would have been in the black community today?
Absolutely.
So you take that, you take the Great Migration, when 5 million blacks moved north. And what's interesting is that I did a story on this. It was much more because of a fear of being lynched. Lynching was so prevalent and not talked about. People moved north for a better life. The value of the land that they walked away from is now the green belt. That would have been trillions of dollars in the black community. Another major event, the burning of Black Wall Street.
Yes.
Yeah.
That's where a lot of our commerce and things were. These are huge things to recover from. Redlining, the biggest real estate expansion in the country after the war, and blacks weren't allowed. There was actually red lines drawn on maps where blacks weren't allowed to buy homes. So we missed all that. Predatory lending, the death of Dr. Martin Luther King. When you look at those events, and then when you think about what's the first thing we said, that black households earning $200,000 or more, $75,000 or more are the fastest growing income group. Who in the world else could have survived all that?
Right.
Absolutely.
But blacks.
And when people act like, oh, we all start at the same place now, slavery is over, there's a whole history that has us not really starting at the same place.
It's two things you mentioned that I feel like psychologically damaged us too. You mentioned Black Wall Street. That probably made a lot of black people feel like they didn't want to start their own communities again because they saw how that community got taken out.
That's exactly
and with Martin Luther King Jr., people didn't realize the economic empowerment plan he was about to put into place
when he was assassinated.
With the Poor People March.
Yeah, he touched when he turned his attention to money.
That's when they got him. It wasn't the civil rights. It was when he turned his attention to money.
But what you were touching on earlier is blacks not trusting the financial market. Can you blame them?
Right.
When you look at these events in history. But the conversation has got to change to, this is an incredible story of a resilience. We got $1 trillion in buying power. Let's talk. Not what are you going to give us? Let's talk. And that's where the whole, black people should be very, very, very proud of what they've done.
Why don't we trust each other, though? Because it's like, trying to get people to open up a black bank account, like I've heard things like, oh, I got to see how long black banks been around. Well, they've been around Citizens Trust been around for 95 years. One United over 50. You know what I mean? But people don't even know that. But just getting people to take their money and put it into a black bank, they're like, I don't know if I want to put it in a black bank. It's that whole white ice is colder thing.
See if you follow the story. So there's a really great financial planner, George Kinder, he started a life planning movement. And that's, an acknowledgement that there's a lot more money going on than dollars and cents. So he says this beautiful black woman came into his office. And she was very distraught. And he's like, what's the matter? And she's like, I need to save $1 million. I need to save $1 million. And he's like, okay. What do you do? And she's like, I'm a doctor. So he had in his mind, well, maybe saving $1 million isn't too out of the question. And he said, okay, so tell me about your practice. She's like, oh, I work in communities where people can't afford medicine. So right there, he saw the disconnect. Why does this person who's doing her, life work like this needing $1 million? So he starts asking her about her life. And it turns out she lived with a white male stockbroker. That was her boyfriend. So let's look at the messaging in that. White, we're conditioned that whites know more about money than blacks. I mean, this is all going on subconsciously. Yeah. Male, we're way conditioned that men know more about money than women. Stockbroker, you'd think he's in finance. He knows what he's doing. So he's asking her more about his life. And this guy had those sayings we all say all the time over and over. This guy had a saying, it takes $1 million to raise a kid these days. It takes $1 million to raise a kid these days. Did this woman want $1 million? No, she wanted a baby.
Right.
And she didn't even see that. And he was saying, this is what you really want. So then George sat with her and he talked to her about what was important to her when it comes to raising a child, what's important to her. And they put together the experience and things, and it was way less than $1 million to raise a child and stuff with her values. And he put together a plan. She was working so many hours, she had no social life because she was trying to raise them. We don't even know all this stuff is going on. Mm-hmm. And it was funny. I want everybody on Facebook to look for Stacey Tisdale money, all one word, because I put up a webinar for you guys, and I put some of George's tidbits in it. But he called me last year to tell me, guess what? He's like, I saw her again. He's like, I just saw her randomly, and she had a baby and a new boyfriend. Nice. Sometimes you got to go to the root of the problem.
Well, the thing with black banks is, I understand we should, if you're African American, you want to spend money in your community, you should put money into banking black. The problem is, there's a difference between putting money in the bank. I opened up an account and I put $1,000 in, right? But that's very small on the scale. The problem is banking. I bank close to my house, and there's so much things that I do at that bank, whether it's checks, whether it's deposits, whether it's drops, whether it's this, whether it's that. So they get a majority of the business because it's convenient, and it's convenient all over the place. I can travel to, New Orleans over the weekend, and I have to do something with banking, or I have to make a deposit, or I have to take some money out, go to the ATM. They're not going to charge me. That's the hard part about it with banking black. Yeah. It's the convenience, because there are not too many banks around.
It could be more if we invested in them, though. They're not popular because we don't put money in them.
But that's what I did. I did put $1,000 into the account, but
it's just going to sit.
It's just going to sit there. I'll be honest. It's just going to sit there because I bank and I move money in and out so much.
I will say this though, I do so much banking online nowadays. I never go to the bank to deposit a check. I take a picture on my phone, and it goes into my account. I pay things online. I barely ever go to the bank.
When United is a black bank, you can bank with them online.
Right. Yeah, that's what I'm saying.
Mine is a little different though.
How come when it comes to financial history, people don't talk about Mansa Musa more?
They don't talk about what?
Mansa Musa.
We just don't talk about our financial history much anymore.
That's the richest man ever in the history of the world. He was black. Mm-hmm. I just feel like, people see things like that, and that will, get you out of the mindset of we're just a poor people.
You know what else I think is a bad mindset? People think that in order to invest money, you need to have a lot of money.
That's what we were talking about. That's what the TD Ameritrade account, it's $100. Mm-hmm. The Acorns account, you're investing spare change.
People think that investing is for rich people. Oh, you invested, well, you must got money. That's not true. I tell people all the time, even if you're in debt and you owe money, there's little things that you can do to make sure. Because even when I had my old job and I was in debt and I didn't have a lot of money and I wanted to save money to buy a house, I still was able to put aside $100 a month that went directly from my checks, pre-tax, into my Roth IRA. And I didn't even notice it not being there, just to build it up. And honestly, I made so much money just from doing that and not even having noticed it at all being gone. I think that is up to $30,000. And I haven't touched it or did anything, and it's $100, since back then a month for the past however many years.
But I think they make it hard. I made my first, let's just say large amount, not to throw money out there. I made my first large amount doing real estate, but it was easy. I didn't need all the stuff that you need now. Now you need to give blood. You need you need so much now. But before, maybe about 10 years ago, I didn't need anything. I can go there.
Well, that's what the problem was.
But a lot of people made a lot of money off of it. People just abused it. But I was able to cake off doing real estate and flipping and doing that. But they make it so hard.
I think it also depends on where you are. In New York, it's hard. But I think in other cities, if you know where to go, I think sometimes you have to pay attention to trends.
No, it's hard to get a mortgage regardless.
Because some places you don't even need the price of a house.
Everything's, you guys are talking old rules apply. Apparently, so, we're going to have a lot of changes when it comes to
they got to free it up a little bit. They got to allow
regulation
to not get taxed with 23%.
Because think about it, we bought houses in Detroit. We didn't need to get a mortgage for that.
But most people don't have $15,000 cash to buy a house.
Yeah, but some of those houses, if you live in Detroit, you could have bought one for $1,000.
What would you recommend, Stacey? You're the expert.
I'd say the rule of thumb with housing, and everybody bring some compassion to your financial life, because it's hard. It's the leading cause of stress. It's the leading cause of substance abuse. It's the leading cause of whatever. And what we really have to do is learn how to manage the feelings around it and take away some of the character and assassination stuff. Somebody gets into debt. Oh, that person's this or whatever. They could have had a divorce. They could have had an illness. So we had to, first of all, let's loosen that link. So if you don't, so when I'm putting out suggestions, I don't make all, I don't fit all the profiles perfectly. But when it comes to real estate, to not stress out the rest of your financial life, you shouldn't spend more than 30% of your income. And that includes, if it's a house, including all the maintenance and stuff. If it's a rent, it's your rent. It seems that people start to hit that stress level when they go above 30% of their after-tax income.
Right.
So that's just a general rule of thumb. Real estate, home ownership is the biggest way we pass around generational wealth, which is why black people, can I say screwed?
Yes.
When black people got screwed.
No, you're right. Absolutely.
Because like when I was talking about with redlining, that like there's Levittown in Long Island where all the GIs after the war were allowed to buy these cheap houses with government support and blacks weren't allowed to participate. Well, these are the $2 million homes they're leaving to their kids. So we missed all that. The predatory lending thing, we missed all that.
Even
So
Harlem and Brooklyn, a lot of them brownstones we don't necessarily own.
Oh, yeah. And we'll talk about Detroit in a minute. I was just out there last week. But there's a huge message. Home ownership is definitely the way to build wealth. Interesting. If you analyze the investment patterns of the ultra wealthy, they only have a fraction of their wealth in real estate. Then I actually did a story, investing tip from the rich. Don't put your money in real estate. We get that message, but home ownership is not for everybody. There's some things you need to look into. If you're gonna move in less than 6 years, if you might be just following that home ownership thing because you've been told that that's the right thing to do, but it's not for everyone. There's other ways for investing, but just make sure that it makes sense for you before you financially string yourself out. Because now, especially with the economy the way it is, especially young people, you need mobility. You might get that dream job and offer in Silicon Valley. You might get all these things, so you need mobility. So home ownership is no joke. It's expensive, and really take it seriously.
Bank just in case.
Yeah.
I think it's important because I know for me, like I've always said, well, I'm from Brooklyn. I live in Brooklyn now. That's where I bought my house. But I've always wanted to make sure that, later on in life, I own my house so I didn't have to worry about having to pay and rent something out. And I know that's where I plan to be, at least.
Yeah.
And I also know that the house that I bought was a good investment because it's worth way more than what I paid for it. And it's also a rental property in it because it's a 2-family house. So I put myself in a situation where my mortgage is partly paid for because I have a tenant. So I know that it's always going to be a good situation. Like I really overthought it. Like, all right, I have a tenant. If things went left, I have a bedroom that I could rent out to somebody, and
That's
I
what you
essentially
gotta
would not
do.
have to pay any money at all.
That's what you
to live there. So I just think that it's just smart. You have to make decisions based on you can see the trend in the neighborhood and really know what's going on in certain areas. Because some people bought houses that are worth way less than what they paid for it, and their mortgage is more than what their house is worth now.
But the only bad thing about that is majority of the housing market went down. I mean, you couldn't do nothing with it. At one time, everybody says it was a good deal, and then when the house market drops, it just drops unless you live in Los Angeles or Manhattan. But my question is, with the mortgages, is there any way for African Americans to get mortgage? Is there a way around, like a fund or something that they can file to help them with their mortgages?
They should. People should definitely look at credit unions as an alternative, and there's a credit union for just about everything. Like
what is a credit union for people that don't know?
A credit union works like a bank, but actually, once you put your money in a credit union, you're an owner. Like the depositors, you become like shareholders of it. So, for example, there might be like I used to work at Dow Jones. So there's a Dow Jones credit union where they give you all banking services, but at much lower rates, much lower fees. It's like a family kind of thing.
So if you're looking to buy a house, your advice would be to put money into a credit union, just open up an account there first, and then establish history. And then when you try to get that loan, you already have that necessary history.
I'd go to the credit union and I would, flat out, open my account and say, I'm trying to get a mortgage, and I'd take advantage of the advice. The Federal Housing Authority, FHA, there's so many things out there for people. And I guess because I'm a journalist, every time I want to know something, my immediate impulse is to pick up the phone or to try to find out information. There's people, you got to do that too when it comes to your money. There's so many people that want to help you.
There's all kinds of programs that you could take advantage of if you researched. And
and I know you guys check me out on Twitter at STisdale1, and I have a lot about credit and debt I've been getting a lot of questions on lately. And one place I want to put out there, we're talking about getting help. The National Foundation for the National Foundation for Credit Counseling, NFCC, that's free credit counseling. And so many of us are having trouble with debt, managing our debt. And you're going to hear all these offers. Hey, call us and we can help you.
We can help get rid of your debt.
We can help get rid of your debt. There's a fee. This is free. And it's the National Foundation for Credit Counseling, nfcc.org.
Now, you mentioned TD Ameritrade. Now, this is a question I get all the time. What stock should they put their money in?
S&P, I'm saying I put my money in the S&P 500 index because of and I think can you check? I think the symbol is SPX. If you go to, it's an exchange traded fund. And when you invest money in stocks, you want diversification. Just like your grandma told you, don't put all your eggs in one basket. So the S&P 500 is a basket of 500 of the biggest companies in the United States. That's what, like when you hear on the news, the S&P 500 is, it's now actually at its highest level in history since the election. But when you hear just like the Dow Jones Industrial Average, like you can get a Dow Jones Industrial Average ETF. So you own a little piece of all of those companies. So for someone who's new at investing, for someone who doesn't have a lot of time in investing, when you look at places like TD Ameritrades, when you look at places like Acorns, an option that you're going to see is S&P 500. If there might be other words around that, just keep that in your mind, because the most diversified you can be is to own an S&P 500. Take it a step further. So my son opened a TD Ameritrade account, and I told him the same thing. I said, start general. My son, he's 11, so he's really into the environment, and he's, climate change, Elon Musk, all this stuff. So he was looking on TD Ameritrade, and they also have an exchange-traded fund that focuses on companies with solar power.
Right.
You could find an exchange-traded fund that focuses on technology companies. So we're getting started, and what's so nice for everybody out there is all of this stuff now it takes a couple of minutes to do, but also you're going to have a healthy relationship with money when your finances are aligned with your values. So think about things that are important to you. Think about things that you value, and it's out there.
That's what I tell people all the time. I say, whatever you use in your house or whatever you're into, 9 times out of 10, those are going to be the best investments. That's
also Peter Lynch was a great stock market guru, and his whole philosophy, and this is one of the things I tell my son is, invest in things you use.
You use Tide detergent, invest in Tide. You use Colgate toothpaste every day, invest in that.
Mommy, everybody at school has a whatever.
Pair of Adidas.
I'm like, go buy that stock. And it was funny when he was really little, and I was trying to get him into this. Like, gosh, I have to have the new Game Boy or whatever. I'm like, what's the company that makes it? What's the company that makes it? So he started to get into that habit. So I watched him try to tell his friends, go buy some Nikes. I own some of that stock. Go do that.
That's fine.
Get your kids thinking like that.
But just got to be careful because you look at it too much and it'll drive you crazy.
But that's what you don't.
I used to have
you sound like you would I bet you were looking at it all the time.
Like but now I invest. I invest online and I have a stockbroker. The stuff online is more the fun stuff. I invest with the kids. A little bit here, a little bit there. But I used to watch it every day while I'm at work, and you're watching it go up, and then it's staying still, and then you be like, all right, I want to sell, but that's the only problem. You become stalking it. You stalk it.
What about people who have the capital but don't necessarily want to invest in stock, but want to invest in like a business? What's good businesses to invest into?
Oh, they have to. That's going to be different every time. I mean, they're going to have to look at each business individually. They're going to have to analyze it. They're going to make sure that it has a business plan. But if someone wants to invest in a business, the first thing I would do would look at someone who did it well.
That's right.
I look at someone who does it well, get their advice. Like what you were touching on before is we need to share our stories more. We need to have. There's so many great things that Black people have done with money. For all of those events I told you about in history, those challenges events, that means right after it, there was somebody else. There was somebody there who picked up the pieces.
Right.
There was somebody there who figured out a way around it. We need to share our stories, study our history more. There's so many successful Black people, like we were talking about Byron Allen, Black billionaire who just bought the Griot.
Byron worth $300 million.
Yeah.
In entertainment, and people act like they don't even know who Byron Allen is.
Right.
So, study their stories, read each other's stories, go buy a book. These are accessible. I put as many stories as possible out there of different people. Again, check me out at Tisdale1 on Twitter and Stacey Tisdale Money on Facebook. But one thing we should do more of on this show is I'd started doing some stories last year, and they would just go nutty. I'd find a celebrity, a newsmaker, what have you, and I'd ask them 4 questions. What are the 3 most important lessons you learned about money? How did you learn them? What impact did they have on your life? And if you had one thing you could convey to people about money, what would it be? Same 4 questions. I did it with Gloria Steinem. I did it with Whoopi Goldberg. I did it with Dre Kirkpatrick, Ronnie Lott, and all these different people. And I mean, the stories were just so intimate.
I bet.
And we discussed them might have been, I'm just making this up. This wasn't somebody's story. I'm just making this up. My father had such a debt problem or such an alcohol problem or whatever that I was always extrally frugal with money, or I got ripped off from this person or that. And that's had a tremendous impact on my life. And if I could tell anyone, one thing, it would be don't get yourself into debt trouble. So we can use those stories. Okay, so now let's look more into debt. But, you learn from each other's stories. And I think that's one thing the Black community really has to do. There's some, we're doing some great things out there, folks. We're really doing some great things.
I agree with you completely, and it's been quite an experience, even for me, somebody that's never had a lot of history, not even in my family, with investing and doing different things. It's always a journey, and you are going to make some mistakes, and the important thing, I think, is to always learn from them and not stress it. That's been my experience with a lot of things that I've been trying to do and invest in. But I think the main thing is, even if something doesn't work out the way that you intended, it's just a learning experience for next time you do something to do it better.
Absolutely. And you're talking about carrying your personal experience into it. And as Blacks, Americans, we carry the load of all of those experiences also. And so it's really interesting to watch. If you look at African Americans and Black immigrants are earning about 30% more in income than African Americans. Their wealth is about 30% higher. They don't carry that historical baggage that gave us this negative, negative mindset, which you keep touching on. We didn't have those conversations at the tables. We didn't have the opportunities to build knowledge. It's funny just to watch their different stories. I remember hearing President Obama once say that, he didn't grow up in the traditional Black experience. And he was saying, I don't think the first Black president could have.
That's interesting.
Because, they just carry something different, and they're doing. One of the reasons when you say Black households in the United States are the fastest growing group, one of the reasons is because of immigrants, and they just bring a whole different attitude and experience to money. So that's why people have to understand the numbers part is the easy stuff. It's bringing your attitude and your, it's shifting those things. And
when you change the way you look at things, the things you look at change.
And I love you guys and the show so much. If you go to search for Stacey Tisdale Money, one word, on Facebook. I put together a webinar just called Change Your Mind, Change Your Money for Breakfast Club listeners and for audience and for everybody that's going to help people do this. But it starts with the mind. It starts with changing how you see yourself. If you look at yourself from a position of lack. So I want people in the Black community to ask themselves a couple questions. What do I see people like me doing when it comes to investing, saving, debt? What are some of the stereotypes that I might be, living up to? How would I have to change my messages if I was achieving my goals? But you have to look inside, because we all have, everybody kind of plays the struggle card, the race card, the high five card when it comes to money. Okay, well, what's that person doing about investing? They're not investing. What's that person doing about debt? They're taking on a lot of debt. They're not saving. I'm doing the same things. What would I be doing if I was really making a statement with my money?
Right.
You have to change your messages first, and everything else changes around you. I promise you it works.
And what you said is real, too. It's like, we can't rely on the government to save us in this situation. And we know all the problems, but what are the solutions?
The new racism is indifference. People are just, it's not. So overt.
Active. And one thing I want to say, too, and in closing, is that I also feel like sometimes we focus too much on short money right now. A lot of times, for me, I know it's been an experience where instead of me trying to run out and get these quick checks here and there, I'd rather focus on right now. I might not be making money doing something, but I'm putting a lot of myself into it and investing a lot of my time and learning different things. And that's actually helpful for me for the future, more to build something that I might not go out for the weekend and make a bunch of money, but I'll stay here and focus on my business and come up with ways that, okay, right now this isn't going to make us any money, but if I start implementing this now, in 6 months from now, this is going to pay off.
It's hard when people are worried so much about paying their bills,
right,
and everything. And it's hard. It's human. People, bring some compassion to your financial life. It's human. I have these feelings too, and I always, try to catch myself. Okay, I shouldn't spend this because I'm worried about this, and I'm like, oh, you're in that fear thing. Mm-hmm. You got to just call yourself out on it,
right? When
you're in these patterns, and think where your mind is. If you're thinking about just paying the next bill, just worrying about this, that's where your experience is going to stay. Mm-hmm. So we got to step out of that a little bit. And like you were saying, even when things got tough, you found $100 a month to build something with. And even just that act of building something. This Acorns app, I'm telling you, when you just look down and all of a sudden you see you build something, your perceptions change. But we talk about this a lot. I encourage everybody, please visit my website at mindmoneymedia.com. And again, follow me on Twitter at STisdale1. I try to have these conversations for you guys all the time just to try to make it an easier journey because it's hard.
Well, we appreciate you for joining us.
Yes. Yeah, it's nice to have you back up here.
Through.
You keep on checking in with us because I feel like we've done a lot since last time we spoke. And I love hearing stories about other people who are checking in with the Breakfast Club and getting some information and advice from you and investing their money and making money
and
too.
What's the link for Breakfast Club listeners again?
Go to Stacey Tisdale Money on Facebook, and you're going to see something for you called Change Your Mind, Change Your Money. It's a webinar just for you all. Thank you so much. I really hope it
Thank you, Stacey.
Starts a great conversation for all of us.
Stacey Tisdale is the Breakfast Club. Good morning.
The Breakfast Club. Every weekday morning. Tune in.